Building a portfolio is challenging in whatever market, but to do it in the year of COVID is really challenging. But if you have progressed this year, then you'll know it's been a challenge. And we wanted to share some of those challenges with you on this show. So we're bringing you a selection of investor stories to share their ups and downs investing in the year of COVID.
Welcome to the Property Podcast, where every Thursday morning property investors come to be informed and inspired. Now, you would have been forgiven for going to bed in March, pulling the blankets over your head and staying there for the rest of 2020. But despite everything that's been going on, some investors have still been making big progress. If 2020 has derailed your plans a bit, there'll be plenty for you to learn from the attitudes of the investors we're following today. And stick around till the end, because in Hub Extra, we've got a quote for you that sums it all up perfectly.
So this week's news story is from the BBC, and the headline reads, "Safety checks eased to help flat owners in limbo." Not the most exciting of headlines, but potentially the most exciting of stories, at least to property investors. Many of you who've been following along week in, week out will know that some property investors, well in fact many property investors, have really been hindered by the EW1S form. So Rob, why is this form feared so much? And why is this potentially a big news story?
Well, many owners of apartments at the moment are in a situation where they can't sell or refinance without having an EWS1 form, which was introduced after the Grenfell disaster and is designed to show that there are no safety concerns with the building. It was initially designed for buildings with cladding, because that was the key factor in the Grenfell disaster, but it's ended up being applied to far more buildings than that. Lenders have wanted to see them for many high-rise blocks, even if they don't have any cladding. This story is talking about how the Housing Secretary, Robert Jenrick, came out the other day and said that he'd secured agreement that the survey would not be needed for homes that don't have cladding. So that will remove a lot of buildings from the scope of needing this form, which is great news for those people, but also good news for everyone, because it means the limited number of surveyors who can do these are going to have resources freed up to focus on the others. It seems like a bit of a confused picture though, Rob, because someone else came out at the same time and said that these forms never have been required for buildings without cladding, yet some lenders seem to have been asking for them anyway. So this whole situation's been a bit of a mess ever since it arose. It seems to be getting even more complicated now, but potentially a bit better. Seems like a contender to get into more deeply on next week's market update.
Yeah, so we'll go away, investigate, and bring you more on this story next week. So make sure you join us for the market update next Thursday, where we'll be bringing you this story and many others.
One of the best things about recording the Property Podcast is hearing what you are getting up to. And we know from the feedback we get that you love hearing about what investors are doing out there in the real world as well. Now, for the last couple of years, we've had a little panel of investors who we check in every so often to follow along on their journey in real time. Because it's great to hear from someone who's been successful and hear them looking back at what they've done and how they've done it. But there will always be elements that are misremembered or glossed over or just don't feel as powerful because it was a long time ago. The investors who we're hearing from today, Iain, Sarah and Steve, are normal people just like you who are out there doing property just like you, and we're following along their journeys in real time so you get to hear their wins, their challenges, their uncertainties, unfiltered as they happen. It's always great to bring you these updates, but even more so at the moment with everything that is going on in the world.
So first up, let's catch up with Iain, who's based in Essex. For those of you who've listened to the investor journeys in the past, you'll remember Iain has been investing before the credit crunch, and he told us his stories of drinking with Eastern European tenants and much more. Today, Iain and his business partners are doing developments in Chelmsford. And last time we caught up with Iain, he was finishing up a build of 3 terraced houses and thinking about getting into studio flats to give his business some cash flow. So obviously it's been a crazy year, but first of all, we wanted to find out how 2020 looked for Iain back in January.
The start of 2020, we thought we had a 20-bed HMO to do in Colchester, part listed building, part new build, which we were all excited about, and days away from exchanging on that one, and then the finance company pulled the plug. The COVID situation brewing, but thankfully they pulled it before we had exchanged and not after, which would have left us in a bit of a predicament. So we're still in talks with the vendor there about a different way of structuring that deal so we can still get it over the line. Still keen to do it, but we're now trying to do it without development finance. So we're looking at vendor finance.
So Iain's plan for 2020 didn't last so long before it was severely challenged. But this hasn't deterred him. Iain and his business partner are considering a bit of a pivot until things start to correct themselves. Because for Iain, it's always about moving forward.
We haven't offered on anything residential. We're trying to keep our powder dry for the bigger stuff, but would prefer to recycle and get 100% back out of developments or larger schemes. But if we haven't got something that's definitely going to happen in the short term, then we need to do something to keep moving forward. So if neither of these developments come off, then it's back to the drawing board and aggressively go for residential property and try and negotiate some good deals that we can at least get most of our capital back out of, and just accept the fact that we're going to have to leave money in a few deals to build up the cash flow. That's the most important thing to us at the moment, just building up that cash flow.
So it's all been about the cash flow. So what have the conditions on the ground been like? Has he found it easy putting deals together, or has he really had to fight for them?
Obviously, the stamp duty holidays sent everything a little bit haywire, which I was personally convinced there was going to be an enormous crash after that came to an end. But reading the Savills report, they very much don't think there's going to be any sort of crash. So it's difficult to tell exactly where we are and what is going on. But I don't think we can really let it affect our decision making, and are just going to carry on doing what we do and play the hand that's dealt to us at the time. If we get stuck with something, we're fortunate enough that we should be able to weather it.
What about location? Have these conditions forced Iain to consider areas that we wasn't particularly interested in last time we spoke?
Yeah, I would still prefer to keep our projects a little bit closer to home. We have sort of been venturing out a little further, and it's something I think we're going to have to continue to do, because Chelmsford itself is quite well developed and very expensive indeed. So finding things very locally is a challenge. So we're just starting to look a little further afield, but again, still trying to keep it within the radius that we can use people we know on any projects that do come up.
And if these larger style developments don't come off, Iain's got a fallback strategy of residential buy-to-lets to keep him going and continue building his businesses.
Yes, yeah, we sort of flip-flop between the developments and the residential, and which we should be focusing on more, which is a sort of conversation we need to have about whether we're going to keep trying to do a balance of both or really focus in on one of the two. I mean, in an ideal world, we'd do the developments for the chunky money and reinvest that in the buy-to-let portfolio to increase that forever money cash flow coming in each month.
Last time we spoke with Iain, he was pretty keen on studio flats because of the high yield that they can deliver. So with everything that's happened this year, is that still the future direction for Iain and his business?
Yeah, the studios are a challenge because of the financing. So if we can't finance them in a limited company, then they're not much use to us, unfortunately. However, well, the one that we currently have does cash flow. So instead, where we have the building company in-house, we're more looking for things where we can go in and quickly add a lot of value through construction, and especially with the new permitted development rights that are coming through or come through, then there's theoretically a lot of opportunity. So it's something we're starting to explore and see what we can do, because ideally we would take something residential and turn it into multiple units, and if we can refinance and keep them all and keep doing that, that would be absolutely perfect. But again, it's finding the opportunities and securing them.
So next up we've got Sarah. Sarah, you'll remember, is from New Zealand, now lives in London, and she's got a couple of buy-to-lets near where she lives. She's also been working on renovating properties up in Sheffield. So, has Sarah's property journey gone according to plan in 2020?
I imagine 2020 to be kind of similar to how it turned out, but actually, in terms of my property deals, it probably turned out better for me, which sounds odd and probably not the nicest thing to say, but actually it did. So I had the intention of purchasing 2 more rental properties and holding them, and then looking for properties that were just a little bit more yield. The other ones had been for capital gain. So that was my focus, really.
So a bit of a strategy shift there. And from being very focused on Sheffield, Sarah's changed the location she's looking at as well. How did that come about?
I spent sort of September last year and then all the way through to February this year doing research, viewing properties with agents up in Manchester, and they introduced me to the Salford area as well. So I looked at properties that were new builds, and by sort of February the 19th, I had an offer accepted and I still managed to get a really good discount on that. So I was quite happy with that property. And then 2 days later, a property came through from the same agent in the same development for a 3-bedroom apartment. And that was on for a really good price as well. And I knew the development, and so I put in an offer sight unseen on that. Both the properties were already tenanted.
So Sarah was making offers in a new location right as everything was starting to go from bad to worse.
The thing that probably changed for us was when COVID started to ramp up. That's when I got a little bit of cold feet, and I think so did the sellers. Everybody at that point, it was March, it was just before the lockdown. It really kind of started to get a bit, oh my God, which way is this going to fly? And I managed to squeeze in a last site visit to the property that I'd put the offer in on that I hadn't seen. And as I did that, I looked at the other property at the same time, the first property, and I kind of went, I don't know if that's really, I don't know how comfortable I feel with that one. It didn't have a long AST on it. That one I went, I've got cold feet on that one. I really want to pull out, or I need to build in a softening in the price for me because I just don't feel comfortable with that one. The other one I felt really comfortable with. I knew I was getting it well under market value, so I felt it was already a softening cushion there. So I went back to the agent and I said, you know what, I'm not comfortable with the first one. It's a really small period of time that might not have happened, even a month later. I could go in and I say, look, this is where I feel comfortable. And it was considerably less than what I'd offered originally, thinking I want to walk away from this, but the seller actually accepted. So for me, we both kind of were in a situation that wouldn't have happened if it hadn't been for COVID.
So the easy thing for Sarah to have done here would have been to just carry on. As much as anything else, it avoids a lot of very awkward conversations if you just carry on regardless. But she acted on her instincts and it really seems to have paid off.
Yeah, I was definitely prepared to walk away from it because I didn't know at that stage whether people would be employed, and I knew that those tenants in there were not on AST. So I asked, hey, what are the tenants' jobs? Just to get a feeling for, are these people going to be okay? Just had no idea what was going to happen, and I didn't want to be left with, holding the baby sort of thing.
So what's Sarah got planned for next year when, hopefully, this is all over?
I want to sell the property in Sheffield maybe next year, seeing what the market does, because the market feels like it's heating up a bit up there, so that I can take the money out of there and make that money that's sitting in there work a little bit harder for me. So that's the plan, and building up a deposit with savings to go along with that at the same time. So that's our goal, is just to keep pushing on and keep adding to the portfolio.
Well, regardless of what plays out in the short term, the pandemic has obviously made Sarah a stronger investor.
Knowing that I was prepared to walk away from a deal that I'd already come quite far and invested lots of time and money in actually put me in a stronger negotiating position, because I think that the seller really knew that I would walk away, and that would be something that I would take away from that experience, is that, be prepared to walk away when things aren't lining up, because it might work in your favour anyway, long term.
And finally, we have Steve. Steve's been investing on the Kent coast over the last 5 years, and he liked the area so much he ended up relocating there. Now he's got his sights firmly locked on somewhere else in the country. So how's the current situation affected Steve?
Well, this is probably where COVID has affected me. It's affected me work-wise. I work in the media, I work freelance, and through this period since kind of March time, my work has kind of halved, and you'd hope it's going to come back again next year. But through this period and through maybe into early next year and towards Easter, I'm earning a lot less than I was. And so that's kind of changed my goals a little bit in the short term. I don't have quite so much money to play with on a day-to-day basis. And so whereas the flats that I've got in Kent have been good in terms of growth, I'm looking elsewhere now for cash flow.
So like many people, Steve's earnings are down, and understandably, that's made cash flow a higher priority for him. But has all the uncertainty made him more cautious as well?
It has made me more cautious. Of course it has. But I also feel that I'm kind of in a reasonably comfortable situation. I don't have any debts or anything like that. And so I feel that I can invest sensibly in order to increase that cash flow. Don't get me wrong. I don't really want to spend any rental income on day-to-day living. But it's nice to know that it's something to fall back on if required.
Steve's also made a pivot here. He wants to up his income, but he knows he's got to look elsewhere. And from the sounds of it, he's going about it sensibly. Where's he off to then?
So yeah, I've kind of gone to the northeast to chase yield. I often get advice that you don't really want to be going to the bottom of the market and chasing yield. And I think I've looked at loads and loads of places, and I think there's loads and loads of towns across from the Midlands upwards where you can chase this strategy. But I think the most important thing is having local knowledge. I come from the southeast, and there's no point going up there and just finding somewhere 55k and buying it, and you don't really know what you're buying or where you're buying it. And so I've been lucky enough to find a contact through networking who's lived in the area that I'm buying all his life, and he's also been in property all his life as a broker for 20 years. He's run a letting agency. And so I've kind of teamed up with him and his team, and that's worked really well. And so that's really given me the drive to chase this strategy, because I've got someone locally who knows the area inside out, and it is giving me good advice. And I think if you're going to go down that route of just buying relatively cheap properties for decent rent for cash flow, you really do need some local knowledge.
Well, Steve is ignoring a lot of received wisdom here. A lot of people tell him not to do exactly what he's doing. But Steve can take this action because he's put the work in. He's reassessed his goals, he's done his research into the area, and importantly, he's building a network around him that can help him achieve his ambitions. And because of that, Steve's in a great place. So 2020 has turned out to be a little bit different from what he expected. How does he see the next 12 months playing out?
Since we last spoke, over the last 9 months or so, either side of COVID, I've now bought 3 more single lets in the northeast, and so they cash flow really well. They're kind of, the strategy has been to buy around the 50 to 55k mark, and to rent out at the 450 to 500 a month mark. And there's a lot of local demand. It's all about finding the right tenants in the right parts of town, I think, really. So that's what I've done over the last 9 months or so. And looking ahead, I feel like I've kind of diversified a bit, because I've got two ends of my portfolio. The properties in Kent have been good for growth, and then obviously these properties up north, I hope will be in the medium term really good for cash flow.
So thank you to Iain, Sarah and Steve for bringing this up to date on what has been an incredible year for all of us, but also an incredible year for you as investors. Rob, I think what's really interesting and what surprised me is that the fact that all of them have changed strategy. Some for the short term, some for the long term, but they've all adapted. And I'll have to be honest, before we got the updates in, I didn't think this would take place. I thought maybe one of them might have adapted, possibly 2. But I had anticipated at least one of them staying on the current course and moving on. But not only have they all adapted their strategy, they seem to have all adapted it in the same direction, which is to increase cash flow. They've had the capital growth, they've been happy with that, now it's all about the money.
Yeah, I was surprised by the changes in strategy as well. And some of those changes were happening anyway. So Sarah, for example, seemed to be changing location before COVID became a factor. But the shift towards the income focus, I can understand, especially in the case of someone like Steve. So Steve's line of work has been particularly affected. He said that his income had been halved. So when you go through that situation, you're naturally going to think, well, I don't want this to happen again. How can my investments help me? It naturally shifts your thinking to be shorter term. Whereas if you're feeling very secure and happy in your line of work, it's far easier to think, oh yeah, well, I'll just do this now, and in 20 years, I'll have this great payoff. I think in general, that's something to be very careful about. It's very easy to start thinking shorter term as a result of something big happening, where that might not actually be the right thing for you to do in the end. But in Steve's case, it seems like a move that's very well thought through. And even though he's doing something which is very different and higher risk because he's going into an area he doesn't know as well, he seems to be going about it exactly the right way.
Another big takeaway for me is that they've all taken action. They've not let events stop them. They've not gone, oh, I'm going to be hurt by this. They've all gone, okay, we're all operating in the same environment. How can I maximize the situation rather than be fearful of it? Sarah made a big, bold move. She's about to walk away from a deal, but ended up managing to get a really nice discount. It's clear that Iain is just determined to keep moving forward. And now he's considering branching out further than before, which he's actually been reluctant to do in the past. And it's funny that, this crazy year has prompted that within him. And Steve said, how he's ignoring the skeptics, but is confident due to his tireless research and local contacts. So all of them really should be commended. They've clearly blocked out the noise that's out there and just made the right decisions for them. And not only made the right decisions, but in some cases, clearly taken advantage of the situation.
Yeah, I agree. And I think looking back, I think they'll all agree that they didn't have the year that they thought they were going to have, but they've had a productive year. It's a year that's moved them forward. And they've done what all the best investors do. The best investors don't stop when times get difficult and be afraid of making any moves. But the best investors also don't just plough on regardless. It would be crazy to keep on executing the same strategy if the world has changed or if your personal world has changed and therefore you need to review your goals. So I think we can all learn a lot from Iain, Sarah and Steve. So I want to thank them for sharing this latest instalment of their journeys with us. It's so helpful and so fascinating to hear what they've been up to, and I'm really looking forward to checking in with them again soon.
Now, we've had a lot of success on the show already, but that roadshow does not stop because it's time for our success story of the week. And Rob, we've got someone else who's made a lot of momentum this year.
Yes, our success story this week is from Rags333, who has left us a lovely podcast review, saying, I recently completed on my first investment purchase, which I bought through Property Hub Invest. There were some ups and downs along the way due to everything that's going on at the moment, but I stuck the course and I got my first month's rental income paid into my account. Yay! Big thank you to the Robs for all the free content they put out. I have no doubt I would not have taken action if it weren't for the knowledge and confidence I gained from them. Well, that is awesome to hear, and great that you've not been put off by all the craziness of this year, and despite everything that's going on, you've managed to achieve a big milestone. So well done to you.
So it's easy to listen to an episode like this and just go, oh yeah, that's nice, and be entertained. But actually, think about what everyone's done in this episode. The work they've had to put in, the sacrifices they've needed to make, the bravery they've needed to show during such an uncertain year. So this week on Hub Extra, we thought it was a perfect time to bring out a quote. And this week's quote perfectly sums up the qualities needed to be successful in this current climate.
And the quote is, success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you're doing or learning to do. And Rob, there are loads of quotes out there around what it means to be successful or what the ingredients for success are, but I've rarely seen it summed up that well.
Absolutely, because it isn't just one thing. Some people will think success is luck, but those people will rarely see any themselves. Success can come to you in the way of luck, but you have to still apply at least some of those things mentioned. Otherwise, it's just not going to happen. All of the wonderful investors who've shared their journeys with us today have absolutely put in hard work. They have persevered in difficult circumstances. They've continued learning. They would have studied to adapt their strategies. It wouldn't have just come to them overnight. They would have had to check if their new strategy was going to work or not. And obviously, sacrifice. Putting the work in what has been a challenging year is absolutely critical. And therefore, they absolutely must love what they do or what they're learning to do or love the journey itself, because otherwise, why would you? So once again, well done to our investors who've shared their journeys with us. Thank you so much. And for everyone else listening, if you've not quite had the year you wanted property investment-wise, then maybe reflect on that quote and think, what aspect, what ingredient have I been missing? And make sure that you do apply it for next year. So next year is a big success for you.
So that is us done for this week. Thank you to the three investors who shared their stories with us today, and hope you found it as inspiring as we did. We'll be back with Ask Rob and Rob on Tuesday, and also next week on Thursday, our monthly market update. Again, so much going on in the market at the moment, lots to make sense of, so you'll not want to miss that one. Until then, enjoy your week, and we'll see you soon. Bye-bye.
Bye-bye.